let me rephrase it. What is that one single rate which can be treated as the effective yield on this bond? Yield is the effective rate of return on this bond. Answer will be that is the rate, the single interest rate for all the maturities, which when used in the pricing will make the return on all the cash flows equal, rather the price of all the cash flows equal to the current price of the bond today. Or let me rephrase it further. That single rate of return which you assume will be existing from today till next 10 years, so that the rate at which you are going to get future cash flows, you're going to reinvest at the same return. The interest rate is not going to change. You hold this bond at till maturity, and every 6 months you're going to get this cash flow, and you reinvest at that cash flow at the same rate, right? Same rate of return. You continue to do that till maturity, right? The effective return that you're going to get, right? That return is what I'm looking for. Or put differently, it is also same as saying I'm going to get all these cash flows in future, right? There's so many cash flows I'm going to get in the future, right? I'm going to get 175 rupees worth of cash flows, right? Now, the present value of all of these cash flows, when you discount all of these cash flows and calculate the present value, you get a value, right? And that value is equal to the market price of the bond. What is that rate of return? That rate of return is also called yield to maturity. Either you say the yield to maturity is your effective rate of return when you buy the bond at the current market price and you get those future cash flows from this bond and you reinvest at the same rate of return. Or you say the other way, the effective rate of return at which you discount all the future cash flows of the bond so that the PV of all the cash flows will be equal to the current market price. That is same as both of them are equivalent. And that number is what is called yield to maturity. So yield